Sometimes trading can be complex. There are a lot of new terms, a lot of analysis that's involved, and quite frankly, it can go over some people's heads. So today we're going to take a look at the platform called Nadex, which attempts to make trading simple by offering a streamlined set of offerings to users to make the process easier to understand and to participate in the overall market. But before we get into that, just a disclaimer, we are not financial advisors. The content on our website and social media are for education purposes only. We strongly suggest that you conduct your own research and seek the advice of a licensed financial advisor where appropriate. All investments, whether it be the stock market, crypto, or options trading, involve risk and there's no guarantee of success, so please do proceed with caution. So as I mentioned, Nadex tries to make trading simple. So trading securities, options, futures contracts, etc. can be difficult. You have to understand things like what are puts versus calls? What does going long mean versus shorting something? What are the number of days to expiration DTE? What's the intrinsic and extrinsic value of an option? How much leverage am I using? Delta, theta, and gamma, the Greeks, are various metrics for determining measures on the overall option. What kind of spread do I have to look at for this? The difference between the buy and sell. There are approaches like using covered calls, the wheel strategy, and it can be quite complex, just the technical analysis alone, looking on TradingView and things like that. So in order to kind of make things simple, Nadex is offering three options to users. They are binary options, call spreads, and knockouts. And again, these are all meant to make trading a little bit more simple. So let's take a look at Nadex site. If you go onto their site, they do list their three options here of what you can work with, and you can click on these and review some information about what that offering is, how it works. You can even click on these and it brings you to a page where it talks a little bit more about the details. We'll dig into those a little bit more as we get further, but you can definitely take a look at that. When you're on this platform, they don't have a recurring fee, so to speak, to use the platform. They work off of trading fees, right? So if you enter or exit before expiration or the trade expires, they in essence charge $1 per trade. And then if you transact within their system, so wire transfers and return checks have a fee, but deposits, withdrawals, account setup, those are all free. The really cool thing about their project here is you can open up an account and open up a test account, so you can kind of play around with pretend money and see if the platform's for you and if you like it before actually putting your real money down. They do also offer some learning blogs and things like that, where you can get kind of more details about their platform. Right, and a little bit more about the company. Because this is trading options on the market, they are regulated by the CFTC, the Commodities Future Trading Commission. So you have a high degree of regulation. This is not like the kind of crypto projects I normally review. These guys are fully regulated. And then even further, they are owned by Crypto.com. Recently, in December of 2021, Crypto.com bought the platform for $216 million. So you do have some weight around overall ownership and regulation. So hopefully that makes you feel more secure when working in their platform. All right, so let's start digging into the details. As I mentioned, the three options are binary options, call spreads, and knockouts. So very broadly put, binary options say, will this trade end higher or lower than a certain amount? So it's really trying to answer a yes or no question. So for example, will the US 500 go above $3,000 per share by 3 p.m. today? And if you answer yes and it goes above that, then you get a reward, or you win the bet, so to speak. If it goes below that, then you lose how much you enter. Really straightforward. That's the simplest of their offerings. We'll go into more detail on all of these in a moment, but in essence, you're just saying yes or no. Will this binary option go higher or lower? Second up would be call spreads. So call spreads are a little bit different in that it says, will this option, will this security effectively end between a range? So using the example from before, will the US 500 end at 3 p.m. between $3,000 and $3,200? If it does, you win. If it does not, you lose. So again, a relatively simple offering, but you can basically and try to ensure that it stays within a certain range, as opposed to saying will it go higher or lower than a value. Right. So it's a little bit more specificity. And then knockouts are probably the most complex of the offerings. It actually says that this offering has to stay within a certain range, and then if it hits a certain value, then you win or lose, right? So again, using the US 500 example, if you think that it's going to get up to $3,200, if it hits that, you're knocked out of the trade and you win anytime within the range. If it kind of goes to 3,000 or below, you're also knocked out, but you lose the money, right? So where binary options, it's saying higher or lower at a given time. Call spreads are saying within a range at a given time, so it can leave that range, but as long as it comes back, you're okay. With knockouts, as soon as it hits the floor or the ceiling, then the trade, so to speak, ends, and you either win or lose. So those are the three offerings. We'll go into detail now on each of those. All right, so first up are binary options. So as I mentioned, binary options allow an investor to predict a yes or no outcome given a time range. So will the US 500 end higher than 39.73 by 3 p.m. today? So the process is relatively straightforward. You select your index. This could be the US 500, for example. You select your end time, and usually it's either 3 p.m. or 4 p.m. or the end of the day for a trade, or the end of a week. So you can have a little bit of options depending on your time horizon, how risky you think it'll be. So, for example, if the price is at 3,000 right now and you're betting it's going to go up to 4,000, that's a huge jump. You want a longer time range to kind of give the market the ability to get up to that amount. So after you selected your end time, you determine your target. Again, as the price goes further away from where it currently is at, it's riskier because the chance of it going up that high or that low is riskier, but the reward is greater, right? So if it's currently at 3,000 and you're thinking it's going to go to 3,001, well, that's not a very crazy bet, so you're not going to make very much money, but it is safe, right? So you have to kind of balance that. It's like a risk management, and you determine buy or sell, right? So if you think that it's going to go above the value, you're buying. If you think it's going to go below the value, you're selling. So let's go actually into the platform, take a look at that. Okay, so here's the Nadex platform. I'm logged in into a demo account. You can see in the upper right, it's a demo. On the left top of the screen, you have the options for binary, call spreads, or knockouts. Since we're looking at binary, we're going to select that first. And then you can look at by market class. So indices, these are US 500, US Tech 100, Wall Street 30, etc. You can look at forex, so the Euro USD pair, USD yen pair, etc. Commodities they have on here, oil, gold, and gas. Or you can look at by duration. For this case, we're just going to look at the US 500. And you can see they offer, in essence, 4 options within here. So between, effectively closing at 3 p.m. or closing at 4 p.m. At the end of the day, which is technically 4:15, when the market will close or when they'll close for the market. And then weekly, you can kind of find out, at the end of the week. We're recording this this video on Thursday, so it only has 1 day left in the week, but you in theory can go in here on a Monday and set your trade and act accordingly. So say if I wanted to do weekly, right now the US 500, it looks like it's at 3873, like right around here, and it has some volatility here. I'm looking at a 5-minute chart, but I can change it to say a daily chart if I like to look at that, different kind of view. So again, this is the 28th, and it kind of shows you the various kind of opening and closing rates for the market. All right, and so that's what the range is right now. Okay, so say that I think, okay, this is a green candle here. It's going up. I think it's going to keep on going up and get above here. I can decide what type of risk tolerance I want to have. So again, it's at 3873. So if I say this 3831 down here, I can select that, and I say, yeah, there's no way this market is going to drop below this value here, this kind of dark blue value, this 3831, by the end of the week, so by Friday. So if I'm sure of that, I want to buy in that case, and so it kind of grays this out here and says as long as this value, the current value here, stays up in this range, then I'm good. And because this is a relatively safe bet, based on where it's operating right now, you can see my max profit here is only about $11, where my max loss could be $99. Each position size in this case is $100, and then they're taking like a dollar fee. So you can see down here some metrics. My max ROI is 9.8%. And then my probability that it would be ITM in the money is 84%. So I have a good chance of winning this, right? And I can do multiple of these, right? So if I want to do like 10 of these, it's 10xing the loss and the profit. So I have more at risk, but I can also win more. If I'm kind of going out on a limb and I say, no, I know that the market's going to tank because some kind of news is coming up or whatnot, I can click sell here. In this case, my profit is much higher. It kind of flipped, right? It's $800 profit and $300 loss overall. So I can go ahead and kind of enter that again, see my probability and whatnot. And this says basically that it's going to not finish higher than this. So it has to finish in this red area for me to be profitable. So I can go ahead and go in here. And then I just, click place order. Say if I'm going to do the safe bet. Again, this is, the demo account. But I place that order. It's going to update my position in a second. Okay, order received. Let's see if this is... I think it's still processing here. Oh, there might be a bunch of activity, but I'll try to place that one more time here. Usually there's a list of orders here, and then there it goes. And then people can buy it, and then the position will show up in here. And they can choose to tweak it. While we're waiting for that, there's also different options. So you can buy it at the market value. So in essence, buying it at what is on the screen here and these default values, or you can do a limit. And GTC is good till close. So it can basically, it's good for a certain amount. So if I really want to get in this and I want to, have a higher chance of somebody buying, this, I can actually decrease or increase my price, accordingly to kind of be more aggressive or more kind of passive on my buy there. I can also look at the market depth. So there's nobody else in this market right now, so that's why it's not kind of selling in this demo environment. But it'll show you, how many people have it in certain areas, whether it's buy or sell. And then, once the position, completes, after I've bought it, then, once the end of the week is done, then I'll get my profit or I'll lose, the amount, and then I'm done. But, the main thing in here is just to be aware of it, if you're Above this, if this number stays up here, you win the max profit. In this case, it's $7.50. Um, if you want to get more kind of details on this, Nadex offers some great details. So if you click on what are binary options and how they work, it kind of talks about this, right? So like there's the price, and a yes is a buy, and no is a sell, and they kind of talk about what you can participate in, what kind of market. The binary option prices are between 0 and 100, like I mentioned. So you get a $100 payout, or you can lose $100 if you lose a trade. They go through kind of an example here, how it's regulated. Again, the CFTC. It kind of talks about some advantages. Really the biggest advantage is upfront how much you will lose or gain, right? So if you are buying just a stock, so say you want to buy Tesla, you could have unlimited gains, or not unlimited, but a set loss in that case. If you short a Tesla stock, you could have unlimited losses and limited kind of gains. So this kind of sets it up front, makes it really clear. I know that like I'm never going to go above 750 in profit or below 92.50 in loss. And then as this is running, as time passes, you can actually sell your positions as well. I can't seem to get the demo environment here working great. Let me try one more here in a different range. Okay. It's not showing up on there, so I'll have to just deal with the glitches in the demo environment. But in essence, you can sell your position. So the order is when it's pending, the position when it got picked up. You can sell before it closes. And so you can imagine as your trade becomes more and more favorable, so imagine this price goes up, you can actually sell this ahead of time and grab a certain percentage of that profit if you don't want to wait. Similarly, if it's going down, you can sell it and you could take a smaller loss than waiting to the end. So you don't have to wait until this finishes. You can actually just buy or sell your position back before the weekends. So that's binary options. Next up, we'll take a look at call spreads. Okay, so call spreads allow an investor to predict if a price will be in a range given a time range or an ending date. So, for example, will the US 500 end between 3,800 and 3,973 by 3 p.m. today? So, where binary options just says will be above or below this dollar amount, call spread says it has to be within this range. So the process is very similar. The only difference here is you're selecting a target range. So once again, let's jump out to the platform here. I'm going to choose, let's do US Tech 100 this time. And I'll say, for the day, which ends in 49 minutes. Well, there's no activity there. Let's see if there's activity anywhere else. Okay. So Wall Street 30, it highlights the section, right? So like if I change my range, it'll highlight what range it has to be in. And so right now it's above that range, right? So if I want it to be more within the range, I can go there and say it's going to stay within this range, by the end of the day. If I want to buy it, if I think it's going to be, I sell it if I think it's going to go outside that range. So buying says as long as it goes between this top value and this bottom value, I win. Selling as long as it stays out of that range, I win. And same type thing here. You can basically buy either market or a limit order, set your size, and it'll tell you your loss or your profit based on what you're doing, which kind of direction of the trade you're in. Same type thing. You just click place order. They'll go ahead and kind of submit that. And again, it's not showing up these orders here. I think it's just maybe a factor of the demo environment or something I'm missing here. But that's the main difference here with call spreads is it's within a range. So over time, say at 4 o'clock it can go up here, and then 4:15 it jumps back down. That's perfectly fine. I still would win, so to speak, if it's in that range. It can leave this target all at once, just as long as it ends in the middle there. And again, if you want more kind of details, about that, you can go to the call spreads section on the Nadex site, find out what they are, and same type thing, you can kind of click here to get more details. And it'll do the same type of explanation about what the differences are and examples and things like that. So I'm hoping just to give you kind of a high level overview of this stuff, and you can kind of do your own research and figure out more if it's for you or not. But next up, let's take a look at knockouts. Okay. So knockouts are kind of similar to call spreads. Knockouts effectively allow an investor to predict if a price will be hit given a time range. Same example as before. Will the US 500 hit 3973 and not go below 3800? So you can get knocked out in both directions. If you go to 3900 or 3973, you could profit. If it hits 3800, you lose money. And that is as soon as it hits that price. So with call spreads, it can go above the range, and as long as it kind of ends up in the middle, you're okay. With knockouts, as soon as it hits that dollar amount, you're done. So if you get a spike in activity, that can kind of ruin your trade, so to speak. But the process for selecting is the same as call spreads. So let's take a look at those. Same type thing here. You choose your market class. Say US 500 again. Okay. So it still shows a range here, right? The reason being is if I want to buy this, then if it hits the 3905, then I get profit, which in this case is not calculating because there's no values here, but it'll be about $80. If I sell, right, and it hits the 3855, sorry, it'd be 400 there, sorry. If I sell and I get 3855, then it'll be $80. So I kind of get knocked out, but if I go up here and it continues to increase, then I lose up at that range. So selling, you lose if it hits the top, you gain if it hits the bottom. Buying, you gain if it hits the top, you lose if it hits the bottom. The one thing I would just caution here is, markets can be volatile. I don't know if this one will show in a great detail here. But these are the kind of minute, time ranges. Let's shrink this down a little bit. So, these things can go up and down, quite, sporadically, right? So if you have like all of a sudden people are pumping at one point in time and it goes up, it can jump above even though the closing and the opening are within this range. So that's one thing you have to be careful of. If you have too narrow of a range here, you can get knocked out pretty quickly. So I just kind of watch out for that. But overall, knockouts are pretty straightforward. If you're brand new to this, I would say look into binary options because that is really just a very simple yes, no, it'll go above the value amount. If you want to kind of dip your toes further, go into call spreads if you feel like it'll be within a certain range. And if you really know what you're doing and you feel like you're pretty confident that it's going to hit a certain value or avoid a certain value, then go into knockouts. So I'd follow in this order as you test. But again, it's not financial advice, just operate however you think will work best for you. The graphics and layout of this slide was designed by SlidesGo with flat icon and free pick resources. All of the content was our own, but the design and the icons and things all go to these wonderful services that offer it free of charge. So definitely take a look at them. They're a great project. So my overall thoughts: if you want to get into trading and you're a bit overwhelmed with things like Webull, with Robinhood, kind of trading with your own broker, Merrill Lynch or whomever, and you just really kind of want to get into the almost gamified side of trading, where you want to have very simple options, yes, no, or just want to dip your toes in the water. I would say take a look at Nadex. The fees are relatively reasonable. Like I mentioned, it's $1 per trade. So you have the ability to kind of make some money if you know where the market's going to go. Obviously, markets can be volatile. We've seen that with various crashes and whatnot. So you always have to still have to do research on what you're investing in and what you're trading. but this kind of gives an easier entry point to it. So take a look. Curious in the comments if you are interested in some of these kind of alternate trading options, or if you just want to see some crypto and DeFi projects. So definitely add some details. Let me know what you think, and look forward to hearing from you.